This is Brandon Christy from Christy Capital Management with our September 2014 Educational Economic Update. In this month's video, we'll be discussing a couple of the economic events that occurred last month and provide some insight into what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. September was a solid month for the U.S. economy. The labor market continued to improve, and the latest second quarter GDP estimate showed that the economy grew 4.6% in the second 3 months of the year. Most importantly, the growth was shared across multiple sectors, which is a very positive sign for the rest of 2014. With the economy on a firmer footing, analysts are paying very close attention to the Federal Reserve. The Fed held an open market committee meeting in mid-September. After reading the economic tea leaves, the Fed voted to maintain the pace of its tapering and drop its monthly bond purchases to $15 billion. This meeting was pivotal because it was the second to last meeting before the scheduled end of the Fed's historic quantitative easing program. By voting to maintain the taper, the Fed boosted confidence that the U.S. economy is doing well enough to take off the training wheels. The next move is interest rates, and the question on everyone's mind is, how long until the Fed raises rates? Speeches by several of the Open Market Committee's members show that there are different opinions on the subject. Some officials want the Fed to raise rates as early as spring of 2015, which is earlier than most analysts had predicted. On the other hand, several other officials believe that the Fed should be extremely cautious and raise rates only when the Fed is certain that the economy has achieved enough momentum. These folks seem to favor leaving rates low until early 2016. Such disagreements are healthy because there is a lot of room for interpretation of economic data and debate about the effects of economic policy. However, these splits mean that Fed Chairwoman Janet Yellen must craft a careful compromise or risk a public break that could cause volatility in financial markets. Why do interest rate changes matter to investors? The Fed has held interest rates at rock bottom levels in order to encourage lending and boost the economy. Now that the economy is improving, the Fed will need to slowly raise rates to avoid high levels of inflation, which negatively affect the economy by chipping away at the buying power. If the Fed raises rates too soon, the economic recovery could falter. If rates are left too low too long, inflation could spike, causing the economy to overheat. To bond investors, rising interest rates will affect the market prices of the bonds in their portfolios. As interest rates rise, bond prices fall as new bonds paying higher rates come on the market. As financial professionals, we spend a lot of our time managing these issues for our clients so that they are prepared for rising rates. The bottom line, we know higher interest rates are coming. We just don't know when. The good news is that the economy is doing moderately well, and the signs favor continued growth this year. Well, looking ahead, investors will be turning their attention to the release of third quarter economic and corporate earnings data to see how the quarter stacked up. We're also approaching midterm elections, which can often exert some pressure on markets as investors weigh how certain results may affect government policies. Well, that's it for the September Educational Economic Update. If you have any questions or concerns, please give our office a call at the number below. Here are some upcoming events that we'd like for you to know about. We have 2 Social Security planning seminars scheduled, a dinner both October 9th and October 14th. We also have a breakfast on October 20th where we will discuss our stop-loss program. This event will also be live webcast. A dinner is also scheduled for November 3rd. Contact our offices at 866-331-7749 to register for these events. Once again, this is Brandon Christy with Christy Capital Management, signing off for the month of September 2014. If you have any questions about what you've heard in this update or would like to discuss your personal financial situation, please give us a call at 866-331-7749. We'd be happy to talk to you.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.